Okay, guys, as usual, it's your boy Ambassador. Just my opinion, giving my opinion, hoping that it could help you bring out your own opinion by trying to react to my opinion. So, guys, just in the comment section, let me know what you think. As usual, I'll tell you to like, subscribe. Also, I was thinking, I was watching this video which we're going to share with you. The guy was talking about the monetary system, the banking system, and yes, he's talking about it from a global perspective. I think he's talking about the UK even. But as usual, when I'm watching this video, I'm thinking about Africa. I'm thinking about my country.
You're firmly of the view that banks create money out of thin air.
Yes, well, I produced the first empirical studies to prove that in the 5,000-year history of banking. Banks are thought of as deposit-taking institutions that lend money. The legal reality is banks don't take deposits and banks don't lend money. So what is a deposit? A deposit is not actually a deposit. It's not a bailment. It's not held in custody. At law, the word deposit is meaningless. The law courts and various judgments have made it very clear if you give your money to a bank, even though it's called a deposit, this money is simply a loan to the bank.
That's true. Yeah.
So there is no such thing as a deposit.
So you think it's poorly and it's adequately named then?
So banks borrow from the public. Okay, so that much we've established. What about lending? Surely they're lending money. No, they don't. Banks don't lend money. Banks, again, at law, it's very clear, they're in the business of purchasing securities. That's it. So you say, okay, don't confuse me with all that legalese.
No.
I want a loan. I want a loan.
Yeah.
Fine. Here's the loan contract. Here's the offer letter, and you sign. At law, it's very clear. You have issued a security, namely a promissory note, and the bank is going to purchase that. That's what's happening at law.
Put it in layman's terms. What does that mean?
It means that what the bank is doing is very different from what it presents to the public that it's doing. How does this fit together? So you say, fine, the bank purchases my promissory note, but how do I get my money? I want, it's a loan.
I want my 200 grand, right?
I don't care about the details, I want the money. The bank will say, well, you'll find it in your account with us. That would be technically correct. If they say, we'll transfer it to your account, that's wrong, because no money is transferred at all.
It's already in
from
the bank.
Anywhere inside the bank or outside the bank. Why? Because what we call a deposit is simply the bank's record of its debt to the public. Now, it also owes you money, and its record of the money it owes you is what you think you're getting as money, and that's all it is. And that is how the banks create the money supply. The money supply consists to 97% of bank deposits, and these are created out of nothing by banks when they lend, because they invent fictitious customer deposits. Why? They simply restate, slightly incorrectly in accounting terms, what is an accounts payable liability arising from the loan contract having purchased your promissory note as a customer deposit, but nobody has deposited any money. I wonder how the FCA deals with this, because in the financial sector you're supposed to not mislead your customers. Anyway,
I don't think the answer.
So the banks create the money supply by inventing these claims on themselves, the fictitious deposits. That can be actually positive for the economy as long as this money creation is in line with the creation of new goods and services, implementation of new technologies, and therefore adding value. And adding value in the economy is funded by this money creation. If that happens, and we're talking about business investment, productive loans, productive bank credit, you will have no inflation. These loans can also be serviced and repaid, and you have a stable economy without problems and with low inequality. And so countries that achieve this, that the banks lend mainly for productive purposes, whether it's Germany in much of its 200-year history, or in the last century, the East Asian economies where bank credit was largely for productive purposes, then you find. But there's two more cases. I quickly need to point them out because that's the contrast.
But just clarify that inequality is significantly lower.
Lower, yes.
Inflation is low.
Yes, and you have stable growth.
And the real economy thrives.
Is booming. Yes, that's when bank credit creation is focused on productive lending for productive purposes.
As opposed to speculation and asset price.
As opposed to, there's two other types. If banks create credit for consumption, it's obvious what's going to happen. You suddenly have more money created and more demand for goods, but it's the same amount of goods and services. So you're creating consumer price inflation. That's well understood, and central banks are watching that a little bit.
And what's
less well understood is, and what's the biggest in the UK, it's probably more than 70% of all lending, actually way more than that, is bank credit creation, so money creation for financial transactions, for asset transactions, for purchasing ownership rights. Now then you have a problem. Why? Because you're creating new money, but you're not creating new goods and services. You're simply...
They're constant, aren't they?
You're giving somebody new purchasing power over existing assets, and therefore you must push up asset prices. So this, you can draw a chart where you show, you know, asset prices, land prices, property prices in the UK, and they will match very closely as I've shown in Japan and other countries. And that also creates the inequality. So when the banking sector has focused too much on unproductive lending, and the UK is dominant.
It strikes me that what you're telling me, and tell me I'm wrong, is that lending, in order to get round this deposit/loan situation, needs to be categorized.
You're right, exactly.
Is that right?
That's right. We need to look at where the money is going. That makes a whole world of difference. Okay. So if money bank credit is extended for productive purposes, you're fine. You'll get a good economy, no inflation, and financial stability. And also, you don't have this inequality problem.
And do you think there should be different capital ratios towards each?
Capital, the whole Basel capital approach doesn't work. Why? Because it's premised on the idea that banks are just financial intermediaries. But they're not. They're money creators. We need bank regulation that recognizes reality of how the banks actually operate.
So what you're saying, this is a regulation problem?
Clearly, yes, it's a regulation problem. That's right. We need different regulation. And the only regulation that actually has succeeded in history, and we have good data for the 20th century in particular, in preventing asset bubbles and banking crises, which are all driven by this bank credit for financial transactions. It leads to this asset boom. And it's a game of musical chairs, you know, you have to play it. It's rational to play it while the music is playing, which is how asset prices are driven by ever more bank credit for financial transactions. The moment it stops, asset prices fall, you get the first bankruptcies, banks get risk averse, the whole thing goes into reverse and banks go bust. But you can avoid this, and the only regulation that has succeeded in avoiding this is guidance of bank credit. Simple rules. The simplest form of bank credit guidance is to simply ban bank credit for financial transactions. It doesn't mean financial transactions are bad. No, let the speculators speculate and let them even borrow money, but not from banks. That would make a whole world of difference.
Who do they borrow it from?
Well, they can issue bonds or, you know, borrow in the markets, whatever they want.
But that's risk reward.
But they shouldn't get access to the public privilege of money creation, you see.
I know what you mean, yeah.
And that creates the problem, that creates the boom-bust cycles. But in some countries, they've succeeded in preventing this asset inflation.
Which ones?
Such as Germany, without even credit guidance, by having a banking structure, a banking system that's dominated by banks that don't want to do this financial speculation in the first place. These are the community banks. So Germany was 70% of banking.
What do you call the Landesbank?
Being, no, not the Landesbanks, the smaller ones, the 1,500 Volksbanken, Raiffeisenbank. Okay. They're actually the main banks in Germany. There's so many of them, each is small. And they lend mainly for productive purposes to small and medium-sized enterprises. The Mittelstand, which has been the backbone of German economic success for the last 200 years, despite wars and disasters, has only been successful because they also have their local small banks funding them all the way through. That doesn't exist in the UK, and that's been why the small and medium-sized enterprise sector always has had a problem in the UK.
So we're stuck with speculation and horrific property porn renovation shows.
Well, the solution is, of course, to create these small banks. We need to create small banks. They're the natural lenders to small firms. The public wants stable growth, none of this boom-bust cycle, banking crisis, public money used to bail out banks. People don't want that. In Germany, these community banks,
it's very interesting because
they've never used public money. In these 200 years, not a single one has ever been bailed out with public money, and no depositor has lost any money.
Although, Richard, your argument is complex, principles are terribly simple.
It is very simple.
And although you're a little defeatist...
I'm not maybe I'm defeatist, but I like it. But it's just the idea of, how can I put it?
Go on.
Getting through the regulatory, they are so reluctant.
But that's why
it is hard work.
But that's why we got you in. We're gonna have you as the ambassador.
I have to say, this has been brilliantly explained.
We open with the question: do we have a finance curse? Does the UK have a finance curse, David?
No. I think it has difficulties, but I think those difficulties have appeared insurmountable 5 years ago. Now I think the occasion says that it's much better, but there is this severe danger of over-regulation, which is completely understandable, not wanting a replication of what happened in 2008.
Has the UK got a finance curse?
Is it a trick question? Because the UK doesn't have finance. The City of London has, and it's not part of the UK.
Good answer. Good answer.
Easy.
It's international, he's right.
The City of London is outside the United Kingdom. Do you know that? It's really shocking. And therefore, it's also not part of the EU, which explains although it couldn't be part of the EU because you have to have democratic elections, and the City of London doesn't, right? It's the banks that have the votes, right?
Right.
Per staff, you know,
I
the
never-
voting
I
system.
never knew
How
that.
do you start
Yeah.
unpicking this puzzle?
I never knew that. That's a very useful piece of
And
information.
of course, it's not part
It's
of
a
the
pretty dangerous piece of information.
And it's not part of the UK because the Queen is not allowed to enter without permission. She's not the sovereign, therefore it's not part of the UK. You know, and of course that's since 1688,
I have to make a note of that.
since the foreign invasion.
There you go, David. That dinner you're going.
And I was watching this and I was thinking to myself, like, what if this guy is complaining, is a British guy or is a European guy complaining about the banking system? What about us? Because we have it 10 times worse. So, first thing he was talking about how they create money, how money is an illusion, the whole banking system being like when they tell you have 10 million in the bank. Actually, they just tell you that they're owing you 10 million because your money is not really in the bank. They have loaned it out and they just tell you that you have 10 million, meaning that we're owing you 10 million. And later on, they tell you that, okay, this is the interest rate of this. But all of that is just them using their mathematics to create money which does not really exist. I was thinking to myself, okay, first, what does that mean for us? I usually have this analogy where I tell people that you cannot walk into a football pitch and you notice that the referee is putting on the jersey of the other team and then you are hoping to win. That analogy has 3 layers to it, but I'll just break it down on the first layer. The first layer is the whole monetary system, the whole banking system is owned by foreigners, for not trying to point white, black, Chinese, whoever. But from the African perspective, the banking system is owned by foreigners. And there is that competition between who gets the most. It's a capitalist world. There's always competition. So I'm coming to buy, I want to get at the cheapest price. You are trying to sell, you want to sell it at the highest price. There is competition. That's what happens in those bargaining rooms. But the sad thing is Africa is hoping that of some benevolence, people will just give him the best price. People will just give them the best currency. People will just give no, it does not work like that. You having more means him having less. So there's no way he'll just work in your favor. Now my analogy of the referee putting on the jersey of the other team. The whole banking system and the whole monetary thing, it's a foreign thing to Africans. I mean, our banking system, our currencies are brought from foreign systems into Africa. So we cannot be hoping that they will trick the banking system and the currency monetary system to favor us against their system, because us having more means less for them. Whatever they have to do is to protect their own systems. So that's where the analogy goes. There are more layers, as I said, but I'll just leave it at that. So also there's that question of what is backing money. It used to be gold, now it's no longer gold. So on what grounds? Somebody said at one time, I watched one of these my guys I watched was saying, what is backing money now is military might. It's on their ability to attack you and then make you subdue or make you bow down to their currency. That's what's backing. It's no longer gold. Because when gold used to back money, you could actually say, okay, it's based on this amount of gold in our reserve that we have, the value of our currency is this. But it's no longer the case. I think one American president wiped that up, and then from then now it's almost like the dollar is the goal which is backing all the other currencies. They're waging towards the dollar, which is not right. Because whatever the dollar says is their value will be their value. Although they decide to bring it down or bring it up, like what the Chinese do from time to time. So I also think, as always, I'll tell them all the things I say, Africans should stop complaining. We should start building our own systems and putting in the work. People who attack me saying, no, but you know, they have tricked us. They colonized us. Yes, they colonized you because it's in their favor to colonize you. They tricked you because it's in their favor to trick you. So you have to also use your own brain to say, okay, how can I build our own systems to protect our own things? You don't stand and complain that they have done this, they have done this, they have done that. So what? What do you do about it? So stop complaining and start building our own systems. Also, we need independent systems around our health, food, education, monetary systems. Because Those are the things that will matter if we develop or not. It's not some of those indexes and things here and there, some of the other things I don't want to list necessarily here, but what will help us to grow is going down, folding our sleeves, going into the mud, building our own systems from scratch, depending on our own. As always, they said this is that one continuum which produces what they don't consume and consume what they don't produce. That just leaves them in that position of permanent beggars. Lastly, I think that it sounds like it's a lot to do, but the first step is just from thinking and by thinking. We just need to start thinking. I always talk about it in my videos. It might become boring to some of you, but it's because of the gravity of the problem, of how much we don't want to think. At least the things we do here, we sit, watch telenovelas. People are so invested in that Big Brother show. More youths will vote for Big Brother than they vote for the Nigeria elections, but still they're hoping that the elections will change their lives, but they invest more energy in the Big Brother show. More young women are watching telenovela, the guys are watching football. Look at these two things. How does it help the society? So I'm trying to give us things to talk about which can really help our society, rather than who won this match, which boy was in love with which girl. Those things are good, but it's just divertissement, entertainment, relaxation. It's not what should be the prime focus of our day. As usual, it's your boy Ambassador. I ask you guys, like, subscribe, share. If we build these things, I'm not asking you guys to pay me or anything, but if we build these things and we get many people talking about it, reacting to it, involving ourselves in productive conversation, hopefully we might not change Africa in the next 10 years, but we'll change in the next 20 years. But if we don't like, share, subscribe some of these kind of conversations, Africa will go back by 50 years. As usual, Ambassador, give his opinion. I'm out.
Just my opinion.